financials, he did everything as of the date of the board of dinner meeting. So nothing was as of month end.
Okay.
It was the third Wednesday of the month because that's when he presented stuff to the board.
Interesting.
So
okay. It's consistent.
But there was never a check about anything. And I don't think they really had financial backgrounds. They tried hard. They did a lot of work, but laptop was broken. Couldn't get QuickBooks to boot up. Found out he was using a bootleg copy of QuickBooks. So we had no access to anything. We requested stuff from the treasurer. We tried not to elevate it. And then because we got on the board in September.
How long ago was this?
This will be 2 years. I'll be finishing my second year. At that point, I elevated it to the board and I said, look, we can't do financials. We have no access to anything. What do you mean you don't have access to anything? Call the prior treasurer, which we did, and back and forth and back and forth. He had deleted his data because he was done. So what we were able to do.
So no backup, no offsite backup. This was Tucker this whole aware
no,
of how this was happening
this
before as well?
This is Tucker was doing membership.
Right. I meant like the technical part of there should have been backups of financial records. QuickBooks
everything is islands.
Okay.
We have QuickBooks is now online.
Yes.
So we moved all of it online. We set everything up online.
Yeah, but
I went back and I was able to, with people's help, I was able to recover last fiscal year.
Done and dusted. Whatever happened. We've moved on. So,
but that's why we know so much more now because we got nothing.
And we had to go ask.
We had to go ask, and we had to understand how it all flowed because I had to send it through QuickBooks.
Yeah.
So we've done a lot of research and a lot of different things. QuickBooks is great, getting data out. We are now next year will be our third financial year in QuickBooks.
Okay.
The last year, I'm going to stop and I'm going to go back and I'm going to look at, because there's a lot of quirks going on. So I'm going to take a step back and I am going to go through, I think I printed out the income statement for you. I do everything with cash flow.
Okay.
There are statements that you can print out of QuickBooks. Of course, we're not for profit. It's statement of financial position, statement of activity. I'm doing a cash flow in Excel because there's so many set asides. One thing that I have not done that I intend to do before we hand it off to you, and I'm doing this part of the whole budget process, is we need to change the way the accounts that are being used.
You mentioned you built some of them out.
I built some of it out, and part of it is we've learned so much more that there's one more change I want to make it easier for you. And so what I'm going to show you right now is these are just I do everything. This is just the March financial statements. And so this I actually get out of QuickBooks and I move it into Excel and I hide certain things because it gives us more things than we need. Mm-hmm. So this is just your standard. This is budget versus actual. We put the budget in, and this is all the QuickBooks. So it's all your income. This was as of March. And then the reason I don't have April is because there's 3 pieces of backup that I still have not gotten from April. Scott's father fell badly. And he's the one who does all the backup, the membership data for the revenues. So I don't have April finished. I've adjusted for it in my cash flow because I still don't have that backup. It isn't, everyone's a volunteer, so life happens. So I'm just going to go through the income statement and talk about some of the quirks that you're going to find. Okay. And that's what I want to do about today. And then next time we meet, go through in more detail, because what we need to really do is I'm doing the presentation this month at the dinner meeting, and it's setting up the budget. So I'm going to do I'll do it at that point. I'll have an estimate, a forecast for where we're going to be at the end of the fiscal year, which is August 31st, and then talk about all the assumptions. Mark is doing demographics analysis for us on our membership.
He's our economist.
Yeah, he's our economist. We are finally getting, what makes this so complicated is, I'm trying to think how I'm going to do this. There's so many quirks in this system. I'm going to start off with this first section. The most complicated piece is the membership.
Okay.
That is the bulk of our revenue. We get revenue from activities, which is like Shotgun Rifle Campground.
So the memberships that come in, don't they all come in at once, or?
The way the membership works is membership, our fiscal year ends August 31st. Mm-hmm. The reason it's done that way is we start the billing for the next year in September.
Yep.
And we want to make sure that people don't, because there have been issues in the past, they didn't really look at cash flow and they would use the cash when it came in. But that's for the next year's expenses. Nationals membership is calendar year. So we do not match nationals, but if we tried to match nationals, we wouldn't get any revenue in until 3 months later.
Yeah.
So all of the statements go out through the membership chairman in September.
There are other chapters that do it this way?
Most of them do it this way,
okay.
Because we have to get our.
That makes sense.
But that's why we're set up as an August 31 fiscal year end.
So we wouldn't have to do any truncating or reporting to the calendar year.
No. Our IRS filings are our fiscal year.
Yes. Okay.
But what makes it quirky is, and this is why we had such difficulties last year because we did not understand all the quirks, is membership. When you join the Isaac Walton League, you're joining a September 1 through August 31st year. When you pay your dues, national is January 1 to December 31st. So there's a mix match there. But we need to do it that way so that we can, because most of your activities and expenses are going to happen spring through the summer. Fall, everything starts to really wind down. Nothing really happens over the December, January time period. So that's why we're trying to get all of the membership in. And people also like to make donations at the end of the fiscal year. So they'll bump up their dues a little bit. So that's the reason why we start sending our membership out in September. And it's due to the chapter by December 31st. Membership, and we discovered this, like when you were to go to a board of dinner meeting, Scott Harmon talks about membership. There's two different kinds of memberships. There's voting membership and there's paid membership. And it took me forever to realize that Scott did not, when I talked about membership and he talked about membership, we were talking about totally different things.
So I'm just going to play ignorance. So I know bits and pieces.
That's okay.
What's the difference?
Paid membership is, you wouldn't, I'm assuming you have a family membership because there's two of you. You check it, three of you. So there's a paid member. You have paid membership.
Yeah.
When we are voting on resolutions, those are voting membership. So in terms of the different kinds of membership, these are all the different kinds of membership. And when the money comes in, we have a share that goes to national that we pay out, a share that goes to the division, because there's National Isaac Walton League, there's Maryland Division, and this is what we keep.
There's a Maryland gets a cut. Okay.
Yeah. And so this is what you pay in, and that's what we get to keep.
Okay.
So when I'm doing all my calculations, and there's some quirks in why I need to do my paid membership versus voting membership, I'm counting actually in my spreadsheet by month, old, new. So I have these categories and I keep track. I am given from Scott Harmon the actual payment. So I can match a name to my number, but we don't publish that. And so only we will have that. And then Mark has that because it also gives us when they joined, what their birthday is, whether, where they're located, because we actually have a very old chapter. And one of the things that we need to emphasize is we need to change the demographics, because we need to have, and eventually that number, and we are slowly getting smaller and smaller, partly because of the economic situation in the world, but partly because we are having members die off. And if we are not getting that younger member set, we're going to have more and more problems because our gross number, our fixed expenses don't change, but now we have less income coming in.
So this is what gives us our accurate reporting, so the powers that be can make those decisions on how to recruit younger members. That's why we're doing this.
But prior to us taking over, no one had ever done any of this.
So then we just
it was all separate islands of information. Membership did theirs, we did ours.
It's like we kind of think the dollar amount's going down because the bank account's not quite, but that's about all they knew.
No one even looked at it. Because
so by doing all this, we could at least get out ahead of it.
And that's exactly
we're already behind.
Very good. Yep. Okay. So, and the first year was hard because no one told us anything. We didn't have paper. We had to go back, and I had to recreate an entire fiscal year. Mm-hmm. Actually, we have 3 fiscal years. We have 21, 22. Right? Yeah. Yeah. I don't. My first year, I probably put in 300 hours worth of work on the books. This past year, I probably have done 150.
Yeah.
You're not going to do that much because I have figured all this stuff out.
Built books out for PTAs and swim clubs and stuff, but not the amount of work that this is. This is incredible.
You haven't even heard the quirks yet.
Yeah.
But it's organized now.
Okay.
But I'm trying to give you the background.
Yeah.
So voting members, it's like we have 2 issues coming up in June. And that's part of the quirkiness.
Could you explain the difference between voting and paid?
I'm doing that right now. Paid is I can keep track of all this money. So my paid membership ties to my revenue.
Got it.
Voting membership is the same number, but family memberships get 2 votes. So if Scott were to say there were 100,
voting is the same dollar amount?
No, there's no dollar amount. It's a whole
count? What's the same amount?
So if I say there's 600 members that I got paid for, and of that 200 are family. Mm-hmm. For me, family is 1 member.
Right.
Voting in terms of changing resolutions, in terms of board decisions, in terms of we are requesting bylaws changes, that is voting memberships. So that's my paid membership, and family membership gets counted twice.
Just family.
Just family.
No, half for students.
Nope.
Or youth.
Nope. Family membership is twice, and that's how it is in our bylaws.
Okay.
So that's our quirkiness, and this is why we had a problem because Scott kept talking about membership, and I kept saying, I can't find it. It doesn't match my numbers. It's going down. No, our members are this. So we had this long thing until we finally figured out. I am talking paid membership, and he's talking voting membership. Because National is talking voting membership. They are not talking paid membership. And the other quirk is once we get our members paid, we have our listing, which we submit to National. And National is supposed to update their list to match ours, and then you get your card. National is not always accurate. National is not timely. We have asked for changes. I have asked for changes for a long time. I have 2 children. My daughter's 22, and our son is 26. You know how long I've been trying to get them out of our family membership?
Out of?
Because they are not, you only have family membership until you're 18. So I've been trying to get our daughter out of the family membership for 4 years, and our son out of the family membership for 8 years. They are still in my family membership because National won't move them out because they are so far behind in their record keeping.
So they won't move them out, which means they don't get a voting.
No, it doesn't make a difference. We are losing revenue because they're under my family membership. They should be under their own membership.
So they want to pay.
But we can't get National's not moving them out.
But National's not moving them out, and we can't take their money until National moves them out?
Because they won't get a card. So that's a quirky thing, and we're still realizing that because now I was able to.
Is there any way we could do that in escrow for a bit for holding?
We could talk about that. We have not done that, but again, they would not be a member of the National Isaac Walton League until National.
But that sounds like National's problem. At least we could get our revenue in.
But then there's whole liability issues in terms of National. We're part, and I don't know all the ins and outs, but there was an issue with it. I would love to get this fixed, but I was so busy working on this. That was a minor thing, and I don't want to.
Sounds like a distant horizon thing we'll worry about later.
Yeah.
Okay.
Okay. So I'm going to keep going. So the reason we are so focused on membership is because this number is going down.
Yep.
When they kept talking, we were at 1,000 members. That was like 8 years ago. And it has been going every year. We went up in COVID because there wasn't much else to do. And then we're dropping. We only have like 600 paid members, 600 to 650. So, and
so was that 1,000 paid as well from years ago?
I don't know.
Okay.
I don't know. I have
Fair
no
enough.
comparison because it was all membership. And it's only because
for all we know, it could have been 603, and we could just be staying.
No, the revenues have gone down. Revenues are down. So I know we are down.
Where you built out the previous years, you're able to see the revenues.
Oh yeah, I can see the trends.
Okay.
We are definitely down. From 3 years ago, we're down 25%.
Okay. So we don't know the exact membership number.
I don't know the mix. I don't know anything, but we know we are down.
Okay.
And that's why I am focusing on cash flow, because a lot of people don't understand when you put your budget, that doesn't mean you get to spend that money. That's what your planned activities are. If we don't get the revenue, you can't spend it. I haven't been fighting with people because what's in my budget? It's like, we don't have the cash. You can't spend it, but it's in my budget. It's like, I understand that, but we don't have the cash. We're reevaluating because we don't have the same number of members. You can't spend it. So this is my battle because they're not understanding what I'm talking about. And I've educated the board a lot, but it hasn't gone from there to the committee chairs.
So like we're doing with MCPS, we don't have the money either in the budget. So we put a spending freeze where everything is on hold and it needs an exemption.
That's what we did 2 months ago because I finally got them
How'd
to
that go over?
People are panicked. I did it in we started it in the January talking about it.
Mm-hmm.
And it's like, you can't spend the money. So that's why when I did this.
So when John wants to go buy fish food, he's going to need an exemption even though it's in the budget.
Yes.
Got it.
And it has to be approved by the board in advance.
Yes.
So, and I told you there's so many quirks. The reason, and that's where our membership number. So that's why paid membership is important. So we keep account each year of renewals, and then this is the new line. So next year, hopefully, at the end of this fiscal year, we'll know how many members we have in August, because that's this current fiscal year, and then we will use that to do an estimate. I probably would still do 10% below, because we are not. The trends are we are not maintaining membership.
Okay. You're thinking 10% year over year.
The reason I'm doing that is that I need to have some sort of restriction. Otherwise everyone's up to spend their money.
Got it. Okay.
I'd prefer to, and I've told them last year when I did the budget presentation, I said they told me they were going to hold the membership, and I said, look, our fixed costs are about like 45% of our costs of our revenue. We only have, and now it's a higher percent, because we have less revenue coming in. I said, we only have that much. I don't want to say we're going to increase. You all could tell me we're going to increase this. I'm not putting that in the budget because we need a cushion. I would much prefer to tell you in January, you're right, I was wrong. We increased our membership by 20%. You can spend more versus, I'm sorry, I was right. You're cut. So that's how I presented it. And I think we need to do that again because it's in the budget. You understand finance. They really haven't. They in the past, whoever got the job was the person who volunteered. They don't have a financial background. At one point, Ron Marshall was doing it, but he's an attorney. It's a different perspective when you're doing this. Another reason why this is important is that, and that's one of the amendments that are coming up in June, is different boards have put different restrictions on our revenue. About when we knew that lead abatement is going to come up, and you'll hear more and more about that. And are you familiar with what?
Let's assume that I'm not.
Okay. At the rifle and pistol range, we shoot lead.
Here bits and pieces.
Yeah. Eventually, it has to be reclaimed.
Mm-hmm.
We did rifle and pistols done. We did estimates on, people made guesses of how much lead was there. That's why when you shoot the rifle pistol man, you're asked how much you shoot now, because we made guesses. And we got someone who agreed to bid on it, assuming they were going to be able to recapture lead and get money from that. Didn't happen because we didn't have as much going in there as we thought we did. And that's why we are tracking how much people are shooting for the rifle pistol range. The problem with the shotgun range is it's dispersed differently because we have different type of shooting. Several years ago, it was brought up, and I'm a member of our own archery range. We made complaints because some of the shot fall, when you were doing the back part of the 3D, you were getting hit with shot fall from the shotgun range. Yeah, and so we voiced complaints. In those people, the shotgun was not happy because they felt that we were intruding on their territory. But it's like it's going over the creek and landing on the arch. So it got somehow something got reported to the EPA, and we had to do a full analysis on the shotgun range. We had to have someone come in and do a survey, and it turns out there are wetlands that we did not know about. And that's why things are changing in the shotgun range, because of course you can't shoot into the wetlands. In the future, and that's one thing that we need to talk about in the budget, they're going to probably have to put curtains up. That's why we are not shooting the same way we have, because there's wetlands near the archery, but it turns out now there's wetlands on the other side of the range that was never in any of the topographical maps. But when all this started, the board made a decision that they wanted to increase dues, and that increase of dues would be set into long-term capital to help cover the future costs of lead reclamation. So I need to know how many people are in each category, because each category has a different amount of set aside. So family membership, say that's $25. Individual membership is less, student is less. So we have to calculate in order to be able to forecast, again, long-term, those overhead costs. How much of that revenue, we don't get to keep this, because now we have to put so much aside for that long-term reclamation. Yep. And it's based on that. There's an additional set aside. A different board said that they feel that we're not putting enough for future capital expenditures. So they put a board resolution in that 10% of revenues are going to go in a long-term capital fund.
Outside of, or in addition
to that.
Okay.
The only problem is they said all revenues. We're getting more donations. Let me finish. Okay. Sorry. Like, for example, the Apollo program, the Apollo archery program. Have you heard about that?
No.
On the first Wednesday night of the month, the archery range we have several members who are current military and former military, and they are working like with Walter Reed, military who have PTSD, and they are bringing them out to the archery range. It's the Apollo archery program. Chuck Thornton is funding it. He's donating $2,000, $2,500 a year for that program. So that's a set aside. But the way the original law was written, or the bylaws, it's 10% of all revenue. So we have to set aside 10% of his $2,000 out of our revenue number.
From the archery range for lead reclamation for the shotgun.
Yeah.
Are they okay with that?
No one realized it. Because that is why you
didn't word that correctly.
They didn't. That is why there's two or three items going in this month that are going to be presented to change our bylaws.
Okay.
Because we're asking it to be only 10% of membership.
So can that be retro or?
No, it's going to be. I would do it as of the next fiscal year.
Okay.
So it'll be it'll be in the budget. Okay. I think it'd be hard to go back. I just think it would make it too complicated.
I agree, but.
So it's going to be as of September 1.
So I'm used to different agencies. If it's just it's fine. There's a lot less strings on these funds than I'm used to.
No, I understand that.
Okay.
We're not huge. You can see we have like 180,000. It's not a huge amount, but we have like the raffles where we're raising money for the Adirondack chairs. I need to make sure I reserve. We don't have a separate account. It's just an accounting because it's been donated specifically for the Adirondack chairs. So that's not available for regular expenses.
And there needs to be some sort of funding raised for certain projects. Go 100% to that.
But that's not how the bylaws are written. The bylaws are written that we have to have 10% set aside in long-term capital of all revenue.
And do you anticipate them fixing that?
That's my proposal. It's going to be it's in the minutes. Yep. Or the membership bulletin is going out. I've written all that up. It's going to be voted on in June to fix that. The other thing,
Well, I guess the next quick follow-up. So for the Adirondack chairs, has all of that gone to those Adirondack chairs, or was that just in the general, we'll buy that, anything additional?
that is why I have my cash flow as a separate, not part of QuickBooks.
Okay.
Because they had everything going in other income. So I am manually keeping track of that. This is one of the things that I want to fix in QuickBooks, and I have not had time. I want to do subcategories under other income. So if I can put another 100 categories, like it's right now it's 3 digits. So I'm going to bring it out to 6 digits. So 01 would be Adirondack chairs. 02, someone wanted to give money. They wanted to put a red and green light system on the rifle pistol range, and they donated $1,000 just for that. So it needs to have its own category, because right now I am manually keeping track of all the set-asides.
Okay.
They didn't even do that. In the past, they would just spend the money when it came in.
Nobody cared?
No one knew it because you didn't get any information.
Nobody cared. It's like, all right, $1,000 for my lights, and the lights may or may not have gone up, and they may or may not have cost $1,000, or nobody cared. Nobody looked into it.
No one looked into it because they never looked at cash flow. They looked at how much cash we had.
I guess it's
because as of March we had $92,000 in cash, so why worry about it? But of that $92,000, I looked at my future expenses. I had to take $18,000 out for the set aside. Anything that's given for the land fund is land fund money that has to be given to Legacy, who manages it. So that's a set aside. All the short-term capital, the dues increases pulled out. I pulled out like the Apollo Archery, the reserve for the lights and R&P. So I tried going through that. And then I also set up so that we would know cash flow. These are all our non-discretionary expenses that we still have to pay by the end of our fiscal year.
Mm-hmm.
So when I would do my cash flow, I'd figure it all out. This is where we were at the end of March for our fiscal year, at the end of the year. Whenever anything came in and out, I like, here's the picnic. So I put everything in. It has to be now approved by the board. This is why they're doing a raffle right now, because they had a lot of guns donated to the chapter. People have died. Spouses don't know what to do with them. We have like 15 guns, 3 black powders, handguns. Some of them are like $5,000 shotguns. So some of them we've got permission from the family. We are going to actually sell on gun something.
Got it.
And then some of the smaller ones we're going to do a raffle, because this way it goes back to the membership. So we have some estimate in here for income for the raffle. There was a mistake that was made this past year. Scott just took over membership and did not realize that he used the honor system that if you didn't do your hours, you would give your $50 dues for like, but in the past, if you didn't do your hours, it was written on your invoice. So of the people who should have paid it, maybe 5% did. That's like $15,000.
Mm-hmm.
So they went back to try and get it, but people haven't responded, and it's tough because Scott made a mistake because he didn't realize he had to change it. He now knows. And that was part of the problem. Everybody knew came at the same time. So there was never a transfer of data.
Yeah.
What you're getting, we didn't have anything.
I see that, yeah.
So, but I've organized it all. So you're going to know things that it took us 2 years to figure out. Because we had to get, again, the island's information. Membership didn't want to give us any data because it's membership. That's their value. And it's like, look, and I had fights with Scott. It's like, your numbers don't balance. I don't believe you. I can't, where's your revenue? I can't believe, and finally I got him to do it. And he realized, that's when we realized we had paid members and voting members. And, if we have a higher proportion of members that are family members, our voting number goes up, but our revenue doesn't never go up. So we figured a lot of this out. Oops, I'm sorry. I think I stepped on a cat.
That's whisker. Don't, you know what? Step one on.
Okay. So those are the quirks. And that's why.
Those are all the quirks? That's it?
No, that's just the beginning of the quirks. So that's why, and I am not getting the spreadsheet out because I wanted to talk about this stuff first before you look at the spreadsheet. I think there's a more efficient way than I set it up. Because I had to, I created it as I was figuring this stuff out.
Yeah, okay.
So there's on my spreadsheet, all the spreadsheet feeds into my cash flow. Okay. Because they kept saying at the dinner meeting, they'd announce how much cash we had, and we had $90,000 in cash, but they didn't mention any of the restrictions.
I've heard that for years there.
But they didn't take into account any of the set-asides. That's why, and this is how I know we are
they
accrual
giving
based.
us our bank balance number? Is that what they're doing?
That's what they're giving you.
Okay.
Again, they weren't finance people.
It's like, it's not zero. We've got some money. Keep the lights on. That's about all it tells us. But
yeah, but now this is why I have been, if I say things, people are listening to me now, because I went through and I said, do you see the red number at the bottom?
Yeah.
So this is how I've been doing cash flow since January. And it took me a long time to figure out. So it's like, every time I talk, they would make different things. It's like, look, I'm going back and I'm doing a basic cash out. This is all my income, my changes in my balance sheet. This is where my revenue balance sheet income gives me. And then I need to adjust that for the things that I know about to figure out where we really are.
Yeah.
So we've had some income. We're breaking even. Barely.
That's not good.
No, but that's where we are because, and the reason we're that way is they told me they were going to hold the membership flat. They promised they were going to bring it up, and we did not. We are
grossly overspending right now.
But the problem is the fixed costs.
Yeah.
Let me see. Did I cover everything? I have my cheat sheet. Did that one? This one. One other quirk that I am fixing this year, I think I told you about, is that I really have not done. I've been so focused on income, case statement, and cash. I really haven't done balance sheet. So I started to do balance sheet, and then I tore my hair out, and because I went to the accountants, our balance sheet, except for cash and retained earnings, has not changed for our assets since 2013.
Yeah, you mentioned that.
I know. I mean, we'll have some accounts payable in and out, and that's why I know we've got an accrual-based accounting, because there's accounts payable at the end of the year, and that's because they spent the money. And then we had things come in because people spent it because in their budget last year, in August and September 1, I started to count it all up. We had $15,000 worth of accounts payable, which ate $15,000 of this year's cash, which puts us in a deeper hole. So by doing it this way, we are not, we are voting on everything. All of the first, second, third vice presidents report it. We, in the board of governors meeting, it's like, if it's not on my list, you can't spend it. If you didn't approve it, the orange or the peach are the approved ones. You can't spend it unless it's approved. People are still spending it. For example, they did campfire, or the camp maintenance people did a fire starting seminar. I don't know if you saw that in the newsletter. I guess because I am relying on the first, second, third vice president, the president, to transfer the data to chair people, because we're not in charge of them. He was budgeted $100 to spend for it. He spent $750 and gave us the invoice because they gave everybody dinner. People didn't end up, they did not charge members, they only charged non-members. Well, the non-members didn't show up because they didn't get anything in advance. Mm-hmm. So on that one activity, we had another $600 we had to come up with. So please don't quit. We've got a hold on it now because I've been beating these people up. Yeah. So you're in a much better situation than they were, because they're now going, and if I say don't do it.
The board
has no idea. No one has been. I don't think they've had an accountant on the board. They've had lawyers running this. They don't understand the ins and the outs. The fact that they were investing, I mean, they spent over the past 2 years, before we knew the problem with the shotgun range, they spent $20,000 or $30,000 on the shotgun range, and Warner would spend the money and give us the invoice. Never went through the board because he had it in his budget. They never capitalized any of it. They never depreciated it. The reason I'm focusing on that is the other thing that's going through this month in terms of a bylaws change is that when they originally wrote up the wording, and it's on the website and it's in the newsletter, they talked about capital asset. And now everyone talks about it's our CapEx. It's like, wait. Is this a capital expenditure or is this an expense? Because only they're calling it capital assets, and that's why we're changing the wording this time. You can use the long-term capital only for capital assets. And they were very specific: tractors, fixed assets. Everyone forgot about that. So they weren't, because the board changes over.
Yeah.
And the data's not going from one to another. There's no SOPs anywhere. Mark and I are working on writing. When we do the financial ones, we're pulling in so many different pieces because you have to understand how membership works. And you have to know that it comes in September, but that money is not available to spend. That's for the entire fiscal year until the end of August. And what comes in September is not, so again, they only looked at, because that was all that was presented was what is our cash balance as of the board of governors or the dinner meeting. And I'm going to be going through, I'm trying not to overwhelm it. I'm going to cut it down a lot, but I'm going to go through all the budget assumptions, and I'm going to talk about a little bit about this in the June meeting. Because I did the budget last year. People had no idea why we had an August 30 year end. And I went through about, okay, this is why it's September 1 through August 31st, is you have to look about when the revenues come in, and you have to match your revenues and expenses. And it's like that revenue that's coming in September is for the next year. It's for our activities. Really, they go January through July, maybe August. Once school starts again, things like peter off to nothing. So that's where that money is. So we can't spend it now. That's got to be reserved for them. And that's why our fiscal year starts September 1, so that we match the revenue and expenses, because then the next September, it'll be from when we're going to spend them. People didn't know about that. So this meeting is going to be to set up a base, so that when all this hits with the budget, the membership will at least have heard it once. They may not understand at all what I'm saying, but I can say, for those of you who were here in the June meeting, this is what we talked about, and this is the implications for it. So I'm trying to set it up so that you're not going to have this. And I'm overloading you on data because there's so many quirks. And now I've documented them that we didn't even know about. Don't quit.
No, I'm.
It's very
A
overwhelming.
lot of questions, but I'm trying to, there's anything that really needs to be gone over, but I need to know right this second. I don't think so.
Okay. But the reason I brought that up is they told me it was CapEx. I put items on the balance sheet.
Yeah.
Okay, I was busy with everything. The account said to me, "Where's your depreciation expense?" And I went, "Crap, I forgot to do it." So I went back and I went back to the capital fund, because that's where because again, no one thought about cash, and they just used operating account to cover all the capital expenditures. Like, okay, we can use the capital fund. We're short cash now. Let's for the capital fund. And that's where all this came in, where we saw the restrictions of the capital fund, because whoever wrote it up did not use the appropriate terminology. It's a little loosey-goosey. And so now we are documenting it. And so I went to the accountants. Okay, give me where I should look up exactly in the IRS rulings what capital assets are and what their lives are. So that is right here.
And that's from the IRS.
This is from the IRS. I didn't print out 150 pages. I just printed out the pieces that were appropriate. What does not qualify? What qualifies? And then there's the definition of all the different kinds of tangible, intangible, different kinds of assets, and tables B1 and B2 go through all your lives.
Using any gas for reference?
No, I'm just using straight life is all I'm going to do, because I was trying to make it as simple as possible. You understand what I'm talking about, but for the next person, if they don't get someone who understands what they're talking about, at least it's simpler.
You don't need an accountant
to
do this going forward, right?
Right, but that's why we're trying to set it up the right way.
Correct.
So I did this. This is for the 22-23 year. So I did that, submitted to the accountants. 22-23 is closing out. I know it ended August 31st. It got complicated. In October, my mom fell, and I was out of the area. She ended up passing in November.
Sorry.
That's okay. So I didn't do any of the year-end closing stuff, because of course it ends at August 31st, We don't get the statements for August until the middle of September. Everyone doesn't turn their data in right away. You ask for it. Sometimes you get it. It'll be like October before you get your data. So that's when it happened. And then in January, I tripped over the dog and I broke my kneecap. So I was doing what I could, but and that's about when we started to get more. Mark and I wanted to do demographics because we were getting concerned about the reduction in membership. And we wanted the data from Scott. And it took us 2 months of fighting, getting Carol involved before we got the actual member names with their ages. And so that's, again, there are islands of information and people get territorial. And so we're trying to break that down. And we've broken that down. So you're not going to have to deal with that.
Why they're territorial about that part?
Because I'm the membership chair. You don't need to know that. I deal with national. The revenue's there. We will get... what we've got in the past, and this is, let me pick it out early. Whoops. This is how I organize. When I do my spreadsheets, I have input pages and I have my result page. So my result page is cash flow, minor editing on that for these things that come in and out that aren't there. But you input your balance sheet, you input your revenue, there, and then I input the membership, and all that feeds into my cash flow. So it counts how many members. So I have what I have for the set aside in terms of the one that was $20 or the different amount per member style. Yeah. And then I have my 10% off everything as a set aside. The long term, and now there's a short term one. So we're trying to clean it up in this dinner meeting if we can get people to vote and clean it up so it's much clearer. But what I would get, what I've done is I didn't do QuickBooks as it was happening. Bob Kelly is the treasurer. He's an attorney, never done QuickBooks before. I do one journal entry at the end of the month. And what I do is I will take the bank statement, go through everything, need backup. They're supposed to be sending it to me. We have a number of different accounts, questions that I have. This is what they've done in the past. And what this is their disbursement of the income statement. And so this is income. So what I would get is this is the income. Here's the deposit tickets. This is what Carol's written in for checks. And this is how it's allocated. And so the $1,590, it all adds up. So this is...
What's your other?
Other.
What is it?
I don't know what it was at that one. This is the PayPal deposits. This is the e-deposit. So they would just give me those numbers.
PayPal?
Yes, that's how they're doing their then when you pay it online, you pay through PayPal. I stayed out of that.
Well,
that's membership. That's how Tucker set it up before he died. And part of the complication is when Tucker died, he had his hands in so many different pots. It was never documented. He never gave anyone the password. So they gave us a laptop, but we couldn't get anything because everything was password locked. So we are doing much better at successor planning. Yep. That's why Mark and I are documenting everything. I'm meeting with you because we're not going to have that situation happen again if we can prevent it.
So we have coverage that there isn't one person that's supposed to...
Well, right now there's me doing all this.
Right, but eventually when the new board comes in, when new assignments come in, there's like, these are the login accounts, these are the passwords,
yep.
This is the
exactly
how you do this, here's the...
Yeah, so we're fixing it.
Okay.
There are no SOPs on anything. That Mark and I are going to be working on that in June and July to write up all the financial, but then we're also going to write out what happens in membership and what happens, because you need all that.
You do?
You need all that data. So that's all I would get. So I would just plug those in. And that's when I realized that no one was double checking any of this. And it took a while.
So are we doing any corrections if some of these are put in the wrong account?
I never had any backup.
So my other question is, like, what point in the past or even now does it matter putting it into these accounts? Does that mean the funds are restricted to a certain thing?
Well, this is membership. Okay. See, 411 is... where's 411?
409, 10, 11 aren't there?
Oh, no, I'm sorry, this is 401.
401.
401 is membership renewal. 402 is new membership renewal. This is shotgun fees. 416 is keys and locks. 425 is security. So that means I know that's new member. because they have to pay all that up front. And then 490 if people who made a donation to land fund.
So they wrote one check and then it was dispersed that way.
Right.
And
membership people did this. And
the membership knows how to do that.
We thought they did.
I don't know. Okay.
So
shouldn't there be a formula for that?
there is now in my spreadsheet.
Okay.
And that's why it's taken us so long to figure all this out, because they did their stuff and they didn't, that was their stuff and they were in charge of that.
It's like membership is HR. In my world for a long time.
I understand it.
They need to set it up a certain way, a certain job level, and then that filters down to the accounting, eventually the cash flow, and then the accountants make sure, based on what HR records say it needs to be, gets applied to the correct account.
That's what it should be.
That's what it
But I didn't have any of this information.
No.
This is just what I would get. And I mean, there are 2 deposits. There's deposit tickets. So at least I could validate that's the money that went in.
Yeah. Yeah.
And this has been going on, and the fight started in January. And I finally get the data from Scott. Don't have it for April because his dad fell and was in the hospital, old, and I didn't push him.
Who's helping Scott with this? Is he doing it all himself?
He's doing it all himself. They need to have more people involved, but you have to get the volunteers.
You get the volunteers, but that's also, I mean,
No.
Hey!
No, I understand. So this is September.
All right, so
September's quirky.
these are all.
So I get backup on everything. I won't do it. So when I get the bank statement, where is it? Should be in here. I don't want to take it too long. I must have pulled it out for something. Okay, I'm not gonna. It all balances, but I probably, because I had to do reconciling something else for somebody else. Let me pick October, because September's quirky because I have accrued in August. So I have when I do, you'll see in here in my journal entry, I have a revenue entry, I have an expense entry, and then I have a year-end accrual entry. That happens in November, and then I keep sending it out. It's like, okay, this check isn't cleared, this isn't cleared. We discovered Cub Scouts never cashed their check, so we returned it to the chapter because they donated to the PACs, and then they never cashed it. So after 6 months, it's void. So it goes back to us.
Stale, but yeah.
But that's all of my accruals because it gets issued in.
Yeah. Okay. All right.
So there's an accrual. So that's a more complicated one. So this is my expense, every expense entry. I printed that out. There's not that much. There's the expenses, and this is the revenue. I tried to make as many notes as I can on here. This is all through QuickBooks, and so there's my revenue. And so that's when I would go through, and this is basic
bookkeeping.
Basic bookkeeping. So, this number's still outstanding. What happened? These are auto pays. We have now canceled Verizon because there's no reason to have a phone. Everyone's got. We don't know it.
Who's calling?
No one. I don't think they had an answering machine
out there.
I know. So that finally got canceled. People. I'm missing this one. Eventually, I get. So this is when So once I get the statement, I go through. They give me backup at the Board of Governors meetings. Whenever people see me, they email it, and I keep a folder on my email, print it all out, and so I have backup. If I don't have backup, I go back to the people.
On your email, that's the other thing.
We will get it all switched over, but it's
right now
it's to my personal email.
Okay. But eventually, we will be paying for internet email service for the chapter.
Tucker said everything else out through Gmail. I have not. I've been so focused on this.
Again, yes.
That's a battle you can fight.
Yeah. I'm hearing a lot of potential battles, and I'm like, all right, which ones do I actually want to get into?
But that's why I was working on trying to figure out where we are.
Yes. Okay.
And now we know where we are, and now we have a better idea of where our cash is.
Yeah.
So, and again, so I back everything up.
Okay.
And so I print out my journal entries.
So basically, printing it out in a binder is what we're doing now.
That's what we're doing.
As far as I'm concerned, Gmail, it's gone. It'll evaporate.
Right, but that's why I have a hard copy of everything.
But that's what I'll continue to do.
Yeah, because it just always, and it's like when they did the raffle. This is what I got for these are the checks that were written out. Who get it?
So I'll be honest, Deborah, I come from a very digital, scan everything in. It's all in a cloud with redundancy.
We don't have any of that.
There's assigned permissions that type of stuff. So I haven't done paper filing in a while, but I will.
We know we don't file with the IRS.
No, I mean literally files in a cabinet.
I get paper.
But that's, it's like I would get a paper, scan it in, put it in our file system. And
But see, we don't have that infrastructure now.
That's where my personal, that's where I'm gonna have to.
Well, but unless we get revenue income, we don't have the money for it. So I'm sticking with the paper, but I've got all of that done for, so this is what I do every month.
But we are at least getting the backup submitted, most of it, in a timely manner at this point.
Not in April, because Scott's,
Well,
yeah, most of it, and then sometimes you have to
because
hound
it's not just coming from
Scott, and
it's
sometimes
coming
everything
from-
the only thing that I don't like right now, and it's, Carol's got a lot of things on her plate.
Yeah.
A lot of things, and I need to stop soon. And this is why I told her there's a lot of stuff going on.
Do we want to set up a weekly recurring Thursday afternoons? Would that work? And we
That's
just
fine.
have a dialogue and a conversation?
That's fine. Because we're just starting.
Yeah.
So this is what I was hoping we'd get through, because again, cash flow is my key thing.
Mm-hmm.
This is why I didn't send you a spreadsheet, because I wanted to tell you why I organized it that way.
Mm-hmm.
So, so we've only gone through membership and understanding that. A little bit I talked about set asides, but the rest of this is, shotgun. This is all basic stuff.
That's self-explanatory.
Well, there's cyclicality. You know, you're going to have a bigger, and this number is going to be down because shotgun closed. So we had very little in the budget, so we're over budget, but this is high because in March is when they do the RO fees.
Okay.
So in rifle pistol, which is what this one is, you pay your annual dues in March. So this is a higher number, but no one would give me a breakdown. So when I did the budget, we just straight lined it. I'm working on the cyclicality of everything. So in the budget next year, I'm going to have that in there in March. No one. We are trying to get this on a professional basis, and it was never done. And so it's not finished. It's in process. But I'm trying to make it easier for you. But I want you to understand that this way, being involved in the budget process, you're not doing any of the bookkeeping.
We're doing it just as it needs to be done. That's fine.
Yeah.
I'm not going anywhere.
No, I know, but
I'm following along.
Okay.
And like I said, I see things from a slightly different perspective, and
that's
keying in on certain things.
Because this is what's submitted. Bob Kelly was not there. Bob Kelly's situation is unique. He's a quadriplegic,
right? And
he is now getting issues with his hands. He's not even allowed to drive right now. So he submitted anything. What they would do is he would just read this. This month, I went through and I gave caveats. It's like, okay, there's 21,000 that's going to be the legacy. We have 78,000 ending balance, but understand, we still have to pay half the insurance yet. That's $14,000, 13,000. We have every month there's the porta potties, there's electric bill, there's propane bills. So we don't have $78,000. We wrote a check to Legacy for the land fund in January. They still haven't cashed it yet. Or no, it's in February. So it's like, we're at the point, this is like 4 or 5 months. Why haven't they cashed our check yet? So that's still in our numbers.
Yeah.
So these are all the different quirks, and this is what they would read out. And it's like, wait, you have to understand what this means. So reading this balance out is all they've ever done. And we need to change the way we're doing it.
Yeah.
But that's because they didn't have any financial
nothing else to it, right? They didn't know what they.
Yeah. So it's like, when I was doing all this change in the SOP, I found out in the SOP, no one told me, in the financial report, you have to report what's in the long-term capital fund, what you've spent, what you've committed. That's not been done since they set it up, because no one told the treasurer to do that. So there's things we're still fixing. And then it's like, I ended it was like, were you there at the dinner meeting?
Yes.
So this is what I tried to say.
What you were talking,
Yeah. So.
And I understand why you said it. I was thinking, like, why shouldn't this? Okay.
Because that's not what they say.
Well, I keep thinking why, and then I'm like, because Isaac Walton League and we're fixing it.
Yeah, we are fixing.
So it's like, I don't need to understand
like
why.
This is how much
I need to focus on
the amount that's the dues increase, which has to be. So that's why I need by category the paid membership, because I have to have that set aside because it gets moved once a year to Legacy. And so I got to figure, and when you're doing the cash flow for next year, I got to make sure I write down which month we move it to legacy. And then we have to start reserving it because we move it once a year. So if we get new members after that, that money's got to be reserved because the next year it's going to go to legacy. We can't spend it.
Yep.
But they never did any of this. And that's why it's like voting purposes versus actual membership.
So do we have to worry about if somebody pays dues way after, timing wise, like prorated?
No, membership does that. If you're late, you get a late fee, which we're happy to do. And when people don't do their work and they pay their work fee, that is 100%, except right now there's 10% set aside because of the SOP. We get to keep all that money. There's nothing going to national, nothing going to district. We keep all of the late fees.
Okay.
And that's why that's a bigger number in our budget number.
All ours.
I would say.
Which is why that 15,000.
I would say 300 people don't do their hours. 300 members.
It's what, $50 now?
Yeah. So that's $15,000.
Last year, I would have gladly just been like, I don't have time. Here's $50.
What we're doing is they are also increasing that to 75.
Deal. I'm kidding.
No, I know. But it's like, there was a big, I said, look, and I won't get into, I'm getting into details. I'm trying not to.
I know. It's so difficult.
But that's why having, even just an hour a week, I can go into a topic.
That's kind of why, let's set it recurring. And
But like dinner meetings, finally they agreed. I said, we got to raise, we're losing $200 a month on dinner meetings.
We shouldn't be losing.
Because we don't know how many people are coming. They assume there's going to be 75 that buy enough food for 75 people. They figured out what their budget was going to be. And so they just spent it, not looking at the fact that we had fewer people coming. So I said, we got to raise it. No, we can't raise it. It's like, when was the last time we raised it? They hadn't raised it in 15 years. And so at last dinner meeting, 2 meetings ago, we said, we're raising it to 15. So I was talking to people last dinner meeting. It's like, well, what do you think? It goes, well, we were wondering when you were going to raise that. We're getting a lot for $10. We're getting a lot for $15.
Yes.
So it was a non-event, and it was a battle at the board. People are going to quit. They're not going to like it.
But it's going to quit.
But it's
so in it's part of where my world is, where you're pitching and fighting for these fees and increasing. Like, you give them a reason to like and want this place to exist, they will pay. But you provide a good service, you increase fees. It's like it's the key. We're all fighting for the same goal here.
Right. But in the past, I started last year doing a budget discussion, and I'll do it again this year, and hopefully you'll continue. Membership here's the number, vote on it, yes or no. So they voted yes because they didn't know what it was. So we are trying to give them more information. That's where we're trying to give demographics and say, okay, look, this is the average age of our membership, of the paid membership. If it's I don't know what it is, but say it's 55. It's like, this is not a sustainable number. Mm-hmm. So we need to look for the future where we're going to, and I keep telling everyone, it's not an expense. I need to know where we're investing our money. It's an investment in our future. This is not just for current act. So I'm changing the terminology because it has to be an investment. So it's like, okay, do we want to, if we need to get more family memberships and younger members, what are we going to appeal with them for? Like this adventure committee, we need to support that one because people love that adventure committee. It's new, it's just starting, it hasn't done that much stuff, but they're doing activities that are going to attract a younger membership base. Yep. And that's what we need to focus on. So that's what I'm going to be talking about in June, because it's never been presented this way.
Yeah.
So we are bringing them from green paper, you know what I mean? We're now in QuickBooks Online. One thing that Bob needs to do, and he has not done, is I asked him, because we only pay for 3 logins because we don't have that much money. So he has one as the treasurer. I have one as the data, and we had a third one. The accounts can access it. They have that right. So that's not a login. I wanted him to set up as a generic login. So because the Board of Governors, people don't know what they've spent. So it's like, I want a view only into QuickBooks. We're transparent. Anyone on the Board of Governors can log in with this ID. Mm-hmm. Can't touch anything, but you can look at all your data. So that still has to be set up. But Bob's had a lot of medical issues, and it hasn't happened yet. So you will get phone calls. What have I spent? go in QuickBooks, print out, this is your code. One thing that I have not done, that Andy's a new president and he would like to do lines of business. Shotgun. What's he bringing in? What are your expenses?
Okay.
Rifle, pistol, archery, the big couple ones. I think we can do that. The problem is you have to understand the cyclicality of it.
Right.
And I don't think the cyclicality is really understood yet. And I still have to get that documentation done so that when it's going to be part of the budget process. Okay, this is cyclicality. The last 3 years, this is how you've spent your money by month. And I can print out from QuickBooks now. I can say, I want these 3-year comparisons. Yeah. So I want each month for 3 years. And I can print that out. It's like, so we can see, and I'm going to do some charting so you can see, okay, here's your months and where you've been spending it. So that tells us that in March, make sure you put money, we have to have revenue in there for the RO fees. Where they never included that. Well, they never always made a guess because the committee chairs, I would say 10% submit a budget. Most of them don't. The biggest single one that we have to worry about is, and Phil Taylor is excellent in terms of he knows what's going on, is the farm management. This is the biggest one. And the biggest part of that is all of the farm operations, which are these right here. Because that's for planting the sunflowers. You have to, when you're doing the farm operations, and I'm not sure how familiar you are with how it works, Phil does cover crops, and then you have to kill them off. He has done a magnificent job about bringing the land back in terms of the percent of, if we were to look at the viability of the soil. Mm-hmm. He finds ways to make it work. For example, there is a tool that you can rent through the extension that will crush the cover crop. In order to make it the most efficient, he watches it and he does it right before it goes to seed. So you've got all of that plant material is crushed, put back on the soil. So over the long term, it will reduce our need for nitrogen fertilizer. Nitrogen, yep. But that's a long-term thing. So he's made big changes, but those are our biggest costs is in the farm management.
So where's our nitrogen expense?
We did not do much this year because we didn't have the money. I said, sorry.
Because I know that for this year has gone through the roof.
We didn't do it.
Not even a little.
No, we don't have the money.
I mean, yeah.
We have money. He knows people.
How much has it been in the past?
Phil minimizes it. It's probably like 8,000 or 10,000. Yeah. So he really minimizes what he does. And that's why when he can crush the soil, he's doing it in. And we are not doing the same. We're not doing wheat, corn. It's mostly sunflowers, stuff for the animals. Yep. Sometimes it's fallow. We are now working with WUMCO, and we are putting a garden area, and all the food is going to WUMCO. It's volunteers. There's like an acre garden that we are not managing. Someone's using. We are not. It's
so
all donated.
From an accounting term, what does that mean?
Phil may have some minor expenses for that. We don't get any income or expense from it. Okay. But that is one of the activities that he's managing, that you'll see a little bit, like you'll see diesel goes up a little bit because he has the tractor out there. But he manages that because he has it well under control. And for example, this year with all the rain, that we purchased money for sunflowers. With the rain, slugs ate everything.
Sorry, say that again?
Slugs ate everything.
Oh no.
But through a friend of his at DNR overpurchased. So they donated enough seeds to us so that we could replant. So we don't have sunflower seeds, but we have replanting costs for the tractor.
So are those...
Those are not budgeted. We'll just see it when it comes in because the fuel will be higher. The diesel costs will be higher.
And are we accounting for any large donations? If they donate us $5,000 value worth of seeds, do we even do anything with that in our books?
I don't know. Because we just have the product. And that's one thing we were talking about. They need to acknowledge it in the newsletter.
It's just an expense, and then it's gone. We're not turning it into a product.
No. We don't pay anything for it.
Right.
It's Phil gets it, and it sits in bags, I guess, and then he just replants it. So we are not capturing that anywhere because most of the time we don't even know about it. because Phil just does it.
Thinking long term, is that something we would want to do?
I don't know, because
Just
we're not for profit. So we don't have any tax issues.
Exactly.
We don't have to make money. We just have to make sure, and I keep telling them, we have a fiduciary responsibility to manage the funds in the right way for our membership activities. One thing that was a contention and I lost out on is that on May 25th, they make donations to they have Global Ecology Awards. In the past, it was $6,000 or $7,000. I got them to reduce it to $2,000 to $3,000 this year.
What are those?
They're student awards they give to kids.
Cash?
Yeah.
Prizes?
Yeah.
Okay.
And I was outvoted. Mark and I were no, everybody else on the board was yes, because we have to support the kid. It's I'm not going to get that.
You wanted to not have to give.
I said we don't have the money for it. We need to. It's our responsibility. Is we need to do our membership first, and I was outvoted. So
Well, and that's also one of those things where if that is what the board wants to do, then that is building the demographics.
No, I understand that, but it's like I didn't want to do it this year because we didn't have. But they agreed. They reduced the amount, which was good.
That's why we have to pull it elsewhere. Be like, if this is the priority to give back to the community growth, then you have to cut back in other things. But that conversation that we can
is just starting now.
Yes.
It was never had in the past. We went into this last year when we first started. The accrual for 21 to 22 into 22, 23, because it's the September through August, was $6,000 2 years ago. Last year, it was $15,000, which is why we're in such a hole, because $15,000 of our cash this year used to pay last year's expense. And that's why I'm pushing hard, because I don't want you to have maybe you're going to have some, because people don't submit their stuff on time. But I'm trying to minimize that, and that's why I'm so focused on cash, and I'm beating everybody up at every dinner meeting. They look at me, it's like, I know you don't want to talk, and Bob just lets me talk because he doesn't have time, and so I'm the one managing all this. I propose that we need a finance committee. We need someone who does the bookkeeping. We need like an accountant, a controller, and a CFO is what we need. Yep. We don't have that right now. Bob is writing the checks. He said, I am the disperser. That's all he's doing.
Very easy job, but it needs somebody dedicated to do it. That controller sense.
Right, but we don't.
To see where those accounts are going and if they're getting hit.
One thing that I will have you work with Mark on, per our bylaws, and I finally got it documented this year when Mark and I did it. We have to have, and this is a big fight. I said, we need to have a review. I said, are you talking a small R or a capital R? What do you mean? It's like, is this an accounting review, or is this just someone looking at something? Well, we don't know. And I looked at it, and it doesn't say what it is. So we documented it. Mark and I went through. We spent 6 hours. I went and walked them through everything. So we took random revenue source. We took random expenses, traced it all the way through, and then so we did. And I can send that to you. What I wrote 2 years ago and what Mark wrote last year. We did an analysis. Okay, this is where we're wrong. This is where we did right. This is what our process was, and these are the changes we need to make for the following year. That is submitted to the accountant and the board of governors. Not been done in the past. So we started it 2 years ago. When I did it, when I took over for the prior year, Mark was the lead because I was doing all the bookkeeping, and I'd like to go over with you and he so that you can read what we did. We didn't get everything fixed that we wanted to get fixed.
Yeah.
It's like, okay, this is what we didn't do last year. We're going to on our list for this year, so that and that's our final year-end thing. It's required by our insurance, and the insurance has quirks in it that I haven't even started yet.
Another day.
Okay, I'm going to leave you alone because you have to get to work. You have a headache,
No, this is very intriguing. So,
I mean, this is my.
I said, if you're not passionate about this place, then what are we doing, right? So this is how I can give back.
But you have the skill set. Up until I did it, whoever volunteered was the treasurer. They literally wrote the checks. I don't even know if they balanced the account at the end. And that's all they submitted is this is how much cash we've got.
Mm-hmm.
That's not our financial condition.
No. Well,
so we started that.
We can leave that in a better place. So when you've moved on, I've moved on, whoever comes in, they can just continue. And then if they ever want to redo something, it's not going to have to go dig back through years of records that weren't submitted. They'll all be there.
So now we've got 3 years of QuickBooks online. So now this will be our 3rd year. We have 2 already finished. This is our 3rd year that we'll be starting. No, we're finishing up our 3rd. Look, my numbers get all mixed up. Either we're finishing up our 3rd year or we're starting our 3rd year. I have to go back and see how many years I have in QuickBooks. I think
closing out the 3rd year.
I think we're closing out the 3rd year for QuickBooks.
What you said before, so that's what I think you mean.
Yeah.
Okay.
So then you'll have 3 years of data.
Mm-hmm.
So if you want to do any data analysis, we can actually drill back into everything versus getting, all I got was a statement as of the dinner meeting. Mm. And it never looked at prior months. This is just where we are right now. So
didn't project forward at all.
No, and that's why we are in such a bad shape going into this year, because it took me a lot of the prior year to figure out what was going on.
We don't have any debts, right?
No, we now have debts.
We do.
As of, and I've got to make sure it'll be in this fiscal year.
What debt?
This is all with lead reclamation. Legacy wanted us to pay for part of it. Okay. Even though Legacy was funded. It is a separate organization. They have a separate board of members. They meet once a quarter. When the chapter opened up, we received funding because of restrictions on the land, and I can't remember all the terminology. So we had to I don't remember how many hundreds of $1,000s we got because it's no longer going to be developed. So there's restrictions on the property, and they wanted it out of the Board of Governors' hands because people wanted, I think we should do an RV park, or we should, so it was pulled into Legacy. And all of the investment money, like the long-term cap, and this 10% set aside for lead reclamation is given to Legacy every year. So it's so it can't be spent, which is good. But Legacy says it's their money, and they get to approve what it's spent on. It's our money, and this is the battle right now. And I can tell you now, since you signed that, there's a big battle going on right now about the lead reclamation. It's costing a lot of money because it was never cleaned up. They never looked where they were shooting with the shotgun, and we have a lot of cleanup that has to happen. The EPA somehow got involved. I don't know how. And so they gave some guidance, and the people said, it's guidance. Like, no, this is EPA guidance. It means do it. Well, now there's a battle because to do it the right way, and Blaine Elkins is amazing. He's spent as many as I've done. He's done more in terms of this. Legacy said it costs too much money. We're not spending that much. And so we're in a battle right now with Legacy. They don't. So
how much?
With all the cleanup, because of not knowing about the situation with the land and what, I'm tired, I'm not using the right word, what's wetlands, where you're not allowed to shoot, and you have more strict cleaning, and there's now the new rules in the state of Maryland, EPA changed, you now have to have so many feet from the wetlands that you can't do it, depending upon how they do the cleanup, because we had to document, we were made to document, and we literally have points on a map, and there's stuff in the ground on where everything can be and where they can shoot. We had to pay for that. We've spent several $100,000 so far, and there's several $100,000 more to spend to clean it up. And we have to buy shot curtains. That's not cheap.
What's a shot curtain?
It's going to be on the side.
Curtain.
Shot curtains.
Yes. On
the shotgun range to try and keep the lead, because if you don't, and lead gets in the water, or we have a whole nother liability issue.
Yeah.
So there's a lot of cleanup that happened because it was all these islands. And so we're in a huge cleanup phase.
Money, and we are asking Legacy to
pay for it.
Pay it back to us.
They don't want to. They think it's costing too much money.
Where's the debt come in?
We were required. They wanted us to have, I guess, skin in the game. So in terms of
Legacy wanted us to have skin in the game?
Yep.
Okay.
So there's a $24,000 loan, three-year loan. And I've got it in my cash flow. The first payment's due in September. But I have to reserve it. They said, well, that's next fiscal year. It's like, no. We need to start reserving the money fast. So I've got to set aside $8,000 for the principal payment. I didn't fight about the interest because it's not going to be a huge amount of interest. It's like, okay, I need $8,000 of that money has to be set aside because we got this payment due in September. And even if you send the bills out in September, we're not getting that much money until October, November, December. So we need to have that $8,000 set aside. Otherwise, we're going to be in default on our loan. So I'm going to stop now because we are just starting.
So that was the questions I was wanting to know.
So Legacy still is going to have a several $100,000 bill.
Yeah.
We have 24,000 that we've already spent to do the and I believe it was, we had to have a third party come in because we have to work with Maryland EPA, Parks and Planning. We have easement holders. So everyone had to be involved and we had to have a third party do all the marking. And you will find out more about this when you're on the board.
Yeah.
So this is the big thing because they are trying to do, maybe they are trying to say, maybe we should encapsulate versus, because to remove it, you have to.
Thing, they said it was so much cheaper if we encapsulate.
Yeah, but the question is that, and this is, Dan Dutton is, we don't know yet. That is their proposal. We now have to go back to all the easement holders and the EPA to see whether they're going to accept that. And Dan Dutton is a biologist. He brought up at the last board meeting, and again, that's not my ballot week. I can balance budgets. I don't understand all the chemicals he was talking about. Dan does. He works at NPS. He does AP. Do you know Dan?
I've met him. Not friends, but I know
he's really smart.
Yeah.
But he said, I looked at what you're doing. He says, I got a problem with these chemicals that are being used because now you may have some issues with these chemicals because what they're talking about is rather than, or the original one, it was costing so much. What they needed to do is that we actually were going to take out trees because we had to go and clear, I don't know how much of the topsoil, remove it because it's contaminated, re-landscape it because we didn't know how much the lead is like in the top 6 inches. The encapsulation is not doing that. It's letting the trees fall naturally before we get to some things versus taking them down. But you're encapsulating in some sort of compound and the lead is not removed.
Okay.
We don't know. Dan's looking at different things, whether that is, not that it can't be done, but whether does that do the job by removing the lead from the water cycle.
Does that satisfy our problem?
We don't know.
Yeah.
That is where we are right now. And they are going back to do it because when we gave the original amount to Legacy, okay, to do it the right way, this is how much it's going to cost. They said no.
So this might be less if.
But we don't know
we don't know.
But then we still have our responsibilities as Isaac Waltling member. We're supposed to conserve the water, the air, and the environment. So if we know that this is not going to do it the right way, do we have an ethical? And these are all discussions that the Board of Governors is having. What are and that's what Dan's spearheading is. What are our ethical requirements?
It's wild how we can wrap this.
But that's not us.
Right.
That's Dan.
I know that's not what we're talking about.
No, I know, but then that's why they wanted you to sign this non-disclosure agreement.
That's fine.
Because we don't know. We don't want to go to. They want to get all the data together before they present it to the EPA. So they want anything getting out that we're looking at something different because they want to get everything and they can present a package.
Sign my NDA.
Okay, so
I'm good. All right, let's wrap this up.
I'm sorry. I don't know how long I've taken of your time.
No, we're fine.